March 6, 2019. It is Tackle Trading's Halftime Report, a daily live show where we break down all the markets. We work through our daily routine and talk about what's going on out there. Matt, a little bit of selling here today. First stock that you've got up here makes me just so happy.
I had to do it.
GE down 7.5%. We're talking.
You
How
know,
many times do I have to say this is a trash company that could go bankrupt? All right. I've said it 800 times. I'll say it
you
again.
will, and you'll say it again. But I just want to say one thing, Tim. As a technical trader, when you see a short-term downtrend in an intermediate uptrend, you really want to switch this to the weekly chart. And what you'll see is a little bit of a bullet. Nope, I lied. It's nasty. It's so bad.
The weekly's worse.
Yeah. I don't know why anybody would touch this company.
All I know
is, say again.
You see the low price?
917 or 666. It's the mark of the devil.
Mark of the devil. I'm telling you.
All I know is this: there's a JP Morgan analyst out there that I need to find out because I love him or her. I don't know who it is, but they have a price target of $6 on GE, and they're like one of the most bearish on GE. I agree with you, Tim, on your assessment of GE. And what you said earlier today in the production of the halftime report was very, very on point when you said, Matt, this feels like an investor who's unwinding profitable trades and keeping the bad ones on, right? And keeping the bad ones on. And that's what GE's doing. They're unwinding profitable ventures of their company because they have to unwind to get out of a certain amount of cash crunch or debt or whatever the case might be. And you still have these bad assets on the books. And so, yeah, it's not a company that we believe in. There's no doubt about that. Down 7.28% on the day, and coming into a support level at $9. But this is not something you trade, and I just don't see why anybody in their right mind would invest in GE.
Well, I mean, I guess if you believe in the leadership that they can unwind the balance sheet, if you have some kind
of leadership left 10 years ago, Tim. Excuse me. Jack Welch left in 2001. You've had 17 years of bad leadership here. There's a trend here. So whatever.
Whatever is right. We're also been debating modern economic policy here in the pre-show. We'll maybe drop a few lines of wisdom there at the end of the show.
Okay, hold on. Modern monetary, no. Modern monetary policy that lacks all historical understanding in every capacity. And it's just an absolute joke that we are now at the point in our stage from an economic evolutionary period where now there are people saying that printing money doesn't matter, that debt doesn't matter, that you can print as much money as you want because the dollar is a public utility. The dollar is not a public utility. The U.S. government does not control the dollar, and you can print as much money as you want, but you have to concern about the lagging indicator of inflation, and that's going to have a massive impact. And as for debt, you tell me one historical example where a country has went into debt to the level that we have and gotten out of that without some type of massive economic collapse. And I just don't see it. So we can talk modern monetary policy, and we can talk about the vision of the far left that you can just print as much as you want and go into debt as much as you want, but that lacks all understanding of historical context. It's the most ignorant financial monetary statement I've ever heard, and I cannot believe. And I'm serious. I'm a moderate, guys. I cannot believe that this is now going around in circles in certain aspects of certain political parties saying this is okay. Deficits don't matter. Debt doesn't matter. Money supply doesn't matter. None of it matters. Let's just give everybody a living wage. Nothing ever matters in life anymore. Happy, happy, happy. Everything is awesome. It's just a joke. And I just think it's absolutely it's sad that people actually believe this nonsense, but it's going out there right now.
I'm not a big sweets guy. It is National Oreo Day. If you're out there an Oreo fan, go ahead and pull a sleeve out and let's eat them throughout the halftime report. I might get some Oreos here today, Matt. The market's pretty interesting, but not crashing and not running. It's a day where you might just eat some cookies and kind of make some money in the market. Keep it pretty simple. If you're out there in your halftime crew, as always at the beginning of the show, give us a quick like and a share. Let's get the word out there. Something in the chat as well. #TeamTackle. That's our hashtag each and every day. Cody,
can I just ask the halftime crew one question?
Yep.
Do we really need a national day every day for something? Do we really need that?
Well, I
Do
think
we
it started as
really
a
need a
marketing
national
thing.
Oreo day? It is a marketing thing. That's
That's all.
exactly what it is.
Yeah, it all started there, and different companies said, "Hey, it's our day."
It's
But
our day. Let's increase revenues. It's ridiculous.
It
which I
is
was gonna, I popped in basically to say I like how Matt went off on an economic rant, and then immediately Tim used it as a segue, and oh, Oreo Day.
well,
Completely
they're
like okay, he's on a soapbox talking over there. I'm gonna say something nice and fun.
hey, have a cookie. All right.
It's
My
it's
wife knows this
golf
about me,
out.
by the way. If I ever
Golf
get too grumpy, it's usually because I'm hangry. Just give me a cookie. It is what it is. Keep it very simple. A little blood sugar
Get
correction there, and then get it.
give the little boy a cookie.
That's right. Hey,
Yeah, make him happy.
a lot of interesting economic data, not necessarily impactful, Matt. On a long-term perspective, I haven't always watched these reports come through. The weekly, whenever the jobs number comes out, I'm always waiting for the weekend, the end of the week report that comes through the Labor Department. But the ADP data came out today, and it wasn't very good. It was mixed at best. But the OECD, they actually put out a report saying they're cutting their global growth forecast, and that's an economic development group that kind of ranks and looks at global growth. What was your reaction to the news and the economic data that came out today?
You can't. The ADP non-farm, I don't care about that, to be perfectly blunt with you. It did come in slightly under the expectation. The previous was 3,000 new jobs. That was a robust report from last month. The real number comes out on Friday. So I'm going to wait to kind of hold my analysis till after we get average hourly earnings, non-farm employment change, and the unemployment rate here on Friday. The big news of the day was the trade balance, in my opinion.
Yeah.
There has been so much discussed over the course of the last year and a half about this trade balance that we've had with China. We started this massive trade war simply because of the trade balance with China. And I just want to give you a couple numbers, Tim, because we can get all hot and bothered over politics and who's right, who's wrong, and all that. But the numbers tell the truth here. And here's the numbers on the trade balance with China. Let me get them very quickly. Okay, 2018 goods, just goods. This is the difference between the balance between what China buys from us and what we buy from China. It increased by $43.6 billion to a number at $419.2 billion. So just in goods, not services, just in goods, we increased over 10% trade deficit with China in the past year. So to a now number, 419 billion. If you add in services as well, and once again, you can get all these, and that's why I look at economic reports and not what people say. I don't care what President Trump says. I care about the numbers. What President Trump says, he's just talking to his base. I want to see the numbers here, and the numbers are absolutely abysmal here, Tim. Goods and services up 68 billion. Our deficit increased by $68.8 billion to China in the past year. And that is a whopping $621 billion. So golf clap for the USA today.
Yeah, those trade relationships have been expanding that way for years and years and years. And obviously, it's not turning around anytime soon. The number here today is kind of confirming that. It's interesting when you think about the relationship of trade. Now, I'm a big believer that trade is a net benefit to the economy. I think most economists would agree to that. But there are people that are hurt by trade, and let's not forget that. It does hurt some
farmers in the Midwest.
Yeah, absolutely.
Manufacturers in the Midwest.
That's right.
Absolutely.
Absolutely. There's quite a few interesting companies out there that are running here today, Matt. I do want to start with a couple of earnings.
Before we get into that, I do have another thing I want to talk about with you, Tim. Bloomberg reports today that President Trump wants to deal with China, so it will be a catalyst. And I want to get your take on this. So it will be a catalyst for the stock market. What's your thoughts on that?
Trump is playing a game, and he's been playing that game very well. And if you believe in modern economic game theory, Trump knows that what was said by James Carville in 1991 during that political election is true. It's the economy, stupid. And he knows that if people are working and out there and we keep unemployment where it is, and the Dow is up again, Matt, he has a much better chance of winning the 2020 election.
I agree with that. But think about what everybody that understands market dynamics has been saying over the course of the last couple of weeks, including us. The market needs a new catalyst. Okay, this goes back to the eternal, you buy the rumor, sell the news, right? So I just want to educate President Trump on one thing. Buy the rumor, sell the news. That rumor of a trade deal with China has already been in the market. That's one of the reasons why the market's up 19% year to date. We need something else out there. This could be a catalyst, no doubt about it, but it depends on what the actual trade deal is. If the trade deal is just China buying a few $1 billion here of soybeans and a few $1 billion here, a few $1 billion there of copper, that's not a good trade deal for the U.S. We need to see more in terms of IP protection, more in terms of cyber theft. Those are the things that the market's going to look at to really see it as a catalyst. So we don't have the numbers on that, but I just don't see a lukewarm trade deal announced in March. I don't see as a catalyst for this market, since it's already been, I mean, we've recycled that headline for 6 straight weeks, Tim.
Yeah, it may not end up being a short-term catalyst, but that's probably not what he's talking about either. I mean, he's probably just reiterating a point and trying to get people out there to say, hey, listen, not everything's bad right now. Let's get focused on all the good that I'm going to be getting done. Here's the better question, Matt. What if they don't get a deal done?
Oh, I think they're going to get a deal done.
I do too. I think it's a really high delta, 99 delta.
Yeah,
I do think they will, but if they did not get a deal done after all this anticipation,
I don't see Trump walking away. And President Xi, I don't see walking away here. A deal makes sense for both countries, even if it's limited in scope. It makes sense to have progress there.
Yeah.
It makes sense politically to have progress there, and it makes sense economically to have progress there. I want to remove those man-made tariffs that we have put in place. I'm a conservative individual. I do not believe in tariffs. Okay, that's number one. So there's no tariff that you guys can put out there that I'm going to be like, yeah, that's a good tariff. Tariffs are an inflationary impact to the consumer. Okay, that's what tariffs are. So I hope we do get a deal coming in. I hope we do remove some of those variables from the equation. And I do believe we will get a trade deal finalized this month, because it just makes so much sense economically and politically for everybody involved here. But that doesn't mean that that's going to be a strong catalyst for this marketplace. It still depends on what the parameters of that negotiated trade agreement is going to be.
You know, the heat map, as I look at it today, Matt, is very interesting when you break down the relationships. Bring up XLV for a minute. Healthcare has been in the news for a couple of weeks, and we've been talking about it. It is taking it on the chin again. You know, so many components in healthcare, including healthcare plans like the Cignas, the Aetnas, the CVSs, and the United Healths. But today it's the biotech companies taking it, just really, really hard. Amgen, Gilead, Vertex, Biogen, Regeneron, they're all down 2-3%. What's your read on healthcare here, and on that trend, the reversal, the momentum, picking up volume on the sell-off too?
I warned everybody about it last week, Tim. When everybody was focused on Michael Cohen's testimony, I said, listen, it's not only Michael Cohen on the Hill today. You also have healthcare on the Hill today. And I believe my statement was, I remember when Hillary Clinton came out attacking the pharmaceutical companies and what happened to those pharmaceutical companies. That doesn't shake out in the short term. I'm very concerned about this right now from a healthcare perspective.
Yeah. The other one that's really flashing for me is oil and energy companies, XLE or XLB, either one. They're both going to look very similar. Exxon and Chevron are down today. We had the oil inventories numbers come out. It's a bull pullback pivot retracement. It's actually not really that aggressively selling on B. Give me E if you would.
It's not selling at all. I mean, I'm actually taking that as a potential trigger here. Now, once again, when you're looking at your triggers, and we've talked about this in the swing trading webinar last week, you drop this down into the intraday. So when you see your trigger on the daily, right? And on XLB, I'm seeing my trigger on the daily. I see that hammer candle right here, kissing off that 20-day moving average. And then the market just simply consolidates here. And so you see your trigger on the daily, but then you drop it down into a 15, 30-minute chart type scenario to really kind of find those levels that you want to get back up above. And so, yeah, I'm seeing XLB as a potential trigger here. And by the way, I like the slowdown in gold that's happening as well. I'm not going to get in yet. Again, 1300 is kind of my trigger there. But in XLE, and the difference between XLE and XLB are subtle. It is subtle. You do have a lot of your drillers in XLB, but the energy component has a lot of your services from an energy perspective. They like to trend in line with one another. They are correlated with one another in some capacity. Energy down big today, Tim, looking at it coming down into this support level. This is a neutral formation right here that you're not looking to trade in any capacity. You're waiting for that neutrality to be broken out. The only trade here in energy, and there is only one trade here in energy, and it is not picking it up off a support level after the market's down 1.48%. The only trade is to wait for the energy sector to break out of $67. Until that happens, you're not looking to buy. You're not looking to be aggressive in the energy sector until that happens. On the other hand, you look at XLB here, you got a standard bullish retracement. If you look at the volume here on it, you have a reduction in the volume on that retracement. Let's see that pick back up. So if I'm looking at potential trades here today, and I'm looking at basic materials versus energy versus healthcare, I'm looking at materials right now. It's not difficult. Healthcare broke support. Energy's in a neutral formation, needs to break out of 67, and basic materials forming a bullish retracement with slowing momentum.
You know, a lot of chemical companies and whatnot are running up here today. I look at, because, when I see a bullish retracement on B, but then I see E selling, it makes my head scratch a little bit. So I go to the components. DWDP, which is a Dow component, $125 billion company. Dow DuPont, it's a neutral stock, but it's up today, right? So B is kind of holding a little bit better. You compare that to ExxonMobil and Chevron, which are the biggest companies in energy. Exxon and Chevron are down a little bit here today on some news, although not necessarily bearish there, Matt, just a sell-off.
No, I mean, not bearish in any capacity. I mean, if we were to look at this before, and let's look at this before today. If we were going to look at this before today, what would the analysis be, T?
Bullish trending.
Bullish trend, wait for a retracement, right? Yeah. Wait for a retracement. And where could that retracement come down into? Could it come down into $76 where you have a previous pivot right here in between those rising moving averages? Absolutely. Could it come back down into $78 where you have that 20-day moving average and you have a little bit of a high base type situation right here? Absolutely. So you get the one day pullback, right? Kind of like the one-day bear market, you get the one-day pullback, it comes back down into a support level right around $78, and then Exxon starts buying. Because think about this from a trading psychology perspective. All the traders saw ExxonMobil yesterday at $80, $81. Now it's down at 78, coming into that retracement. They buy it up intraday. This is not a trigger for a swing trade. It's not, but it's something. It's not. This gap doesn't change this trend, is my point.
Correct. Yeah, I still see the trend there intact. You know what, their lows of the day here, Matt, down 0.5%, down 2/3% on the NASDAQ and the S&P. As I look at the advanced decline, though, it's not that weak of an internals. It's just a day where the market doesn't have a catalyst. The market needed probably some profit taking, and we are getting that across many of the different industries. As I look at the top gainers on the Dow and the NASDAQ, though, there are a few companies I want to take a peek at real quick. Top gainer on the S&P, Dollar Tree, DLTR. These companies are always fascinating to me when you start talking about, okay, counter market moves, potentially a breakout. You've got earnings down there. Matt, I like that W pattern at a high point. $100 breakout would be significant here.
It's tradable, but I did not like this earnings report.
It was. I didn't dig into it. What was in there?
Okay. Well, okay. Reported earnings per share of 1.93 versus the expectation of 1.95. So a slight miss on earnings per share. Not bad, but a slight miss on earnings per share. Forward guidance came in underneath. They actually had a decrease in guidance, and that decrease in guidance came in. Now they expect 2020 to come in at 5.16 earnings per share versus what was expected 5.56. So you had about a 10% decrease in guidance in this. So if we had a 10% decrease in guidance and we had a miss on earnings per share, and first quarter guidance for 2019 was also lowered just slightly. So you lowered first quarter guidance, you lowered 2020 guidance by 10%, you miss on earnings per share, revenue comes in slightly in line. So why is Dollar Tree up 3.76 in the best performing stock in the S&P 500? Because, Tim, they announced the closing of 300 Family Dollar stores. So they are shutting down 300 brick and mortar Family Dollar stores, thousands of jobs being laid off. And basically, if you guys remember, Dollar Tree purchased Family Dollar a few years back for about $9 billion. And in that closing of 300 jobs, they're writing off $2.7 billion in writing off $2.7 billion. So to me, As a trader, would I buy above 100? Yes, that's a technical signal. But to me, lowered guidance in the first quarter of 2019, lowered guidance in 2020, markets going up on people losing jobs, and brick and mortar stores getting closed. That's not a company that I want to invest in.
No, that's not necessarily what you want to hear. I saw the gap. I saw the earnings announcement and all that kind of stuff. Did not dig into it, but that's why we talk every day, obviously. I like the technical setup, but now you got to process that news a little bit here. Some interesting selling stocks here today. Halliburton one Matt, breaking below a key support level, HAL. We're talking about energy and oil, and that just broke support. Double top pattern, shortable. There's no question about
shortable.
That.
Yeah. That's it, Tim. Snapback rally. Okay, this is the market recovery, snapback rally, V-shaped recovery. What the market do? The market broke this 32 level, right? Mm-hmm. Obviously, it wasn't 32 on the market, but the market broke that level, and the market's all the way up here. What does Halliburton do? Double bottoms, double tops, M formation, breaking of the M on increased volume over the last couple of days. Mm-hmm. Big red candle. That's a negative sign for Halliburton.
WBA, we brought this one up last week when it broke support, and we talked about it. Walgreens, interesting one here, just completely under pressure, Matt. And if you look at this, and it's a good reminder every day when we go through these routines, one of the reasons why I bring up the winners and the losers is to show all of our halftime crew out there is strength and weakness in every single market. Doesn't matter if the market's dojing up or down, you're going to find opportunities on both sides. Walgreens, not a new entry, but Matt, that is really an ugly chart.
No. It's a falling knife is what that is. And if you caught that short signal here, just keep trailing that stop loss down. We talked about this on Walgreens last week, Tim. And if you'll come back to Halliburton for a second, and I'm not stating that Halliburton's going to do the same thing that Walgreens have been doing. They're absolutely different components, different stocks, different sectors, different industries. Everything is different fundamentally about them. But from a technical perspective, you see that same thing I said on Halliburton. I said on Walgreens, Tim. You know, I mean, you fail to break out, you come down, you break support, and then you start seeing volume pick up. People capitulate, fear sets in, and it drives the market back down. And again, I'm not saying Halliburton's going to do the exact same thing that Walgreens done, but you're looking at a very similar technical formation.
Go back to GE for a second. First of all, I have to point out a headline I just saw from the Wall Street Journal. You know that old song, "All we are saying is give GE a chance." No.
No. I was wondering where you were going with that.
I'm not doing it. No. Wall Street Journal just put out, hey, give them a chance to come back, get rid of their debt. They're moving forward with a new plan. Here's the problem. Markets care about money.
They're not getting rid of just debt. They're getting rid of assets.
Yeah, they're getting
Wall Street Journal.
Profitable assets.
Who owns GE at the Wall Street Journal? What's going on there? By the way, Bank of America and Merrill Lynch cut GE's price target.
Yeah. I mean, we all see, and first of all, if you look at balance sheets and you understand fundamentals, that company has been in trouble for a long time. You're going to get trends up and down. I mean, Matt, between January and March, it went from 660 to 11. So I get it. Everything can go up and down, but don't forget multiple time frame analysis.
Are you serious? The Wall Street Journal reported just give GE a chance.
Yes.
My God.
Doesn't that make you want to short it more?
That is absolutely pathetic. That is absolutely pathetic. Whoever wrote that should be fired immediately. The Wall Street Journal should be ashamed of themselves right now. That is absolutely horrible. Just give them a chance. Give them a chance. That's the head. Oh, God. I'm out.
And by the way, halftime crew, I do apologize. Bill points out.
Yeah, go ahead.
Bill points out something important that I just probably cracked a few glasses. I'm not a singer, Bill. I can tell you that.
No, he's not. But Tim, I was just going to say, let's just give Enron a chance. Let's just give Enron. Let's give Tyco a chance. Yeah, come on.
Move on to the Dow Jones Industrial, if you would, YM contract. Let's break down the technicals. Now, the core components, and if you're halftime crew, I want you to put this in the chat right now. Trend pattern levels. You identify that with every chart. Doesn't matter if it's commodity, an index, or a stock. Trend pattern levels. Matt, we're now on a retracement above most moving averages, but you're flirting now with that 20-period moving average. The trend is still intact, though. This sell-off is a retracement, not a trend changer yet. Now, that could always develop into that, Matt, but read the chart for me if you would.
It's forming a bullish retracement.
Yep.
It's what I want. So, I want the market. I've been saying this. I want the market to retrace. Give me a better setup. Give me a lot of bullish retracements. I love the bullish retracement technical pattern. Give me the market coming back down to about 25,000. I'd be perfectly fine with that.
Mm-hmm. I'm looking across all these stocks in the Dow, and I like trading Dow components. Cisco, CSCO, beautiful little bull flag up at the top. I'm not sure if it's a retracement or not. It is in there developing, but it just hasn't pulled back in percentage a lot here, Matt. Very strong company, though.
No, but I mean, it's similar to this. This isn't a retracement, Tim, but it's similar to this, and we saw
Yeah.
what happened after that. If you're looking at perhaps getting into Cisco, yeah, you would love a deeper retracement back down to about $50 here.
Mhm.
You would love that in Cisco, right?
Yeah, I don't
But
have
just
anything on it yet, but
yeah, but just because you want that doesn't mean you're going to get that, right? I mean, I always say, give me this, give me that, give me this, but that's perfect type technical setups, right? Sometimes you don't get that. What you're seeing here is a little bit of a formation. It's starting that formation of the high base. Now, when I'm looking at this type of technical formation, I never buy the dip here, ever. I'll buy the dip if it comes down to 50 easily, but I'll never buy just a 2-day pullback kind of highlight, kind of hang out. That's more of a high base type situation. So if you're looking at Cisco here, there's really two type of trading technical setups that you're really kind of waiting for. Either one, you're waiting for that little bit of a retracement coming back down into $50. Significant whole number at $50. You also have a little bit of a resistance right here at $50 from the short-term high base it had. So I'm looking at that number one on Cisco, or I'm looking for a consolidation breakout of 52. And so it's just a matter of being patient, Tim. I'm not going to pick it up at 51 when you have overhead resistance at 52. If you break 52, you got clear selling above 52 with the stop loss right underneath 52. So I like that. And Cisco, much like Boeing, Tim, Cisco has been a leader in the Dow.
yeah,
It's really been those two stocks, Cisco and Boeing. And so, yeah, if you missed out on some of this, don't sit there and say, oh, I wish I would have bought it here off that. No, you don't. You never would have bought it off that reversal. I wish I would have bought it off that retracement. Well, yeah, would haves and could haves and should haves. That would have been fantastic. Oh, I wish I would have bought that breakout right there. Yeah, again, go back to history. That'd be amazing. There's always a current condition that you need to analyze and not get caught up in the would haves and should haves and could haves of the world. Look at the current technical condition, look at the current pattern, look at the current trend, look at the current levels, and then make your trading decision based on the current trend pattern and those levels of support and resistance.
I always say this: watch list, pick list, and scanning. And as we're going through the halftime report, Matt, these are my watch list. A lot of these ones. The pick list would be the reports. We'll get to some of those later in the show here. But Cisco, it's definitely got to be on a bull watch list. I mean, where you trade that, when you trade it, that's going to be a different.
It absolutely should be on everybody's watch list.
Microsoft, I actually really like. I know it's probably not an inspiring company for a lot of people, but I got to tell you, I love the fundamentals. I think this company's been strong, been great. It's been resilient. It's holding. This is a breakout candidate, relative strength in the market, Matt, if it could break that high. It's also the high points it put in last fall. So I like this one.
Clear. It doesn't get clearer. Breakout above 113.25.
Yeah. Nike bullish pullback. There's a lot of good patterns here on the Dow. These Dow components are liquid. They're tradable. You're sitting near the 20 on a doji.
The Dow's been outperforming, right? Okay. So you've had a lot of overextended type situations like you've had in Boeing and you've had in Cisco, and now you're looking at Microsoft and you're looking at Nike now. And now what you're starting to see is a little bit of technical patterns start to form that really give us good trading signals here. I like the Cisco technical pattern. I like what Boeing's doing right now. I like the high base on Microsoft with the potential breakout of 113.25. And I like Nike setting up here as well. So, it's just a matter of where do you trigger, but you do got a lot of really good companies that are setting up in really good technical patterns. And it starts with Boeing, Cisco, Nike.
Give me Boeing, because I think we got to talk Boeing here. I love the pullback as well. I had profit taking up near the 440, a couple of different layers where I took profits. Now it's pulled back here, Matt. This is a very, very interesting stock. Obviously, it's been a leader in the market. We talk about it every single day, it seems like. You now finally, for the very first time in how long, you have 4 red candles in a row. I mean, if you're not focused on this company right now, you're not paying attention. What's your read here on Boeing's pullback?
I'm excited.
Yeah.
I'm excited.
Yeah.
I feel like I'm at a gun range, bro. I feel like I'm at a gun range and I'm aiming.
All right.
I'm on my target. I do. I feel like it's gonna. I feel like it's just a matter of give me that doji, let me test the wind. Give me that doji,
Sure.
and then pull the trigger. Right.
I'm with you. I'm excited as well.
You don't like my gun analogies.
I don't.
You don't like my gun analogies. Every time I give a gun analogy, I gave the gun analogy.
Liberals.
Like literally, I gave the gun analogy in the podcast when Tim asked me about some rabbits, about picking the best rabbit. I said, well, get a shotgun and see which one survives. And he didn't like that one either.
I got a different analogy. We could easily go a different way. The vegans are not going to like this one. I feel like my steak is about ready to flip over. I've got that one side seared. I just got to sear the other side, then let it rest. I know I'm almost there. I'm timing it perfectly. Time is critical for how long you sear a steak. You can use a lot of them. Gun analogy is fine. Whatever. I don't really care. I come from a community of gun owners. I have no problem with gun ownership.
The gun range is called the backyard.
I support 2A. I still do 100%. I know we've got complexity.
You still do?
We are not getting into that debate today. Pass, stop loss. We're moving on. Not going to happen. All right, move on to the NASDAQ, if you would. Let's talk tech companies here today. This is what happens when
I almost got him, Cody.
Yeah.
I almost got him.
I saw you were trying there. You were like, oh.
No, we're not doing it. All right.
He's not doing it.
NQ's got relative weakness here against those other two indexes, Matt. Now there's leadership in communications. Facebook's up again here today. I still like what Apple's doing. CRM is finally setting up for some interesting action. The Russell is taking it on the chin, heavily influenced by oil, energy, and a lot of those other companies. RUT has brought it back into a retracement here. What's your read on the other indexes?
I love the RUT, what the RUT's doing. The RUT's behaving like a normal market right here, Tim. We got consolidation at the top, slowing momentum. It starts to pick up steam on the bottom. You have a reduction in volume. Look for that RUT to come back down into 1525. Give me that 1525. And you know what's great about it, Tim? Give me a retracement on the RUT, because you know what we can do on that? Ooh, issue, bull put spreads.
Yeah. And Adam, my Alabama friend, I apologize for bringing up my 2A stances. Well, you and I will have to chat about that offline, and I'm in for sensible gun reform is all I'm going to say.
I hope that tornado wasn't anywhere near you.
No joke. There was like,
it was like a massive.
Adam, you okay, buddy? Because there was a ton of tornadoes down in that.
Oh, in Alabama? I thought you were talking about Utah for a second.
Oh, no. We don't in Utah. We got mountains.
No, it was bad enough. It was on my morning news.
The people died, bro. Like seriously, like people died. There was a ton of tornadoes down there.
That's crazy scary.
Stay safe, brother.
Yeah, play it safe. A bunch of companies that are in my eye here as I'm looking through the NASDAQ gainers. Green Sky Tech, Matt, GSKY, reversal pattern up 7% here today. Roku,
don't care about
4%.
GSK.
We've talked about Roku before. It's developing a beautiful uptrend, actually. Probably not a new entry here. I don't think so. Because if you look back at the history, you've got a 52-week high within shouting distance.
If that was Apple, you would say it's triggerable.
Different companies, different fundamentals.
No, I agree. I completely agree. I'm not criticizing that because it's not triggerable for me either on Roku. But it's just because I don't trust the company as much as I do, say, other companies.
Baidu's neutral, but I actually do like the comeback here. You've got a triple bottom developing, and I've been interested in Chinese companies rotating back in for a while. Break at 180, guys. Put that on a watch list if you don't currently have it. Is it 180, 177?
177.
177, that resistance right there.
Keep an eye on 177. We talked deep dive about Baba versus Baidu the other day. I still like Baba more, but Baidu is a really good company in my estimation. It's a fundamentally strong company in my estimation. It's been underperforming the rest of the Chinese tech over the course of the last 5-6 weeks. Mm-hmm. But it break above 177 is still absolutely tradable.
Yeah, and a blast from the past here, Matt. GoPro, GPRO.
Oh God,
you got to do it, dude. Look at this reversal bullish pullback pivot.
I'm not doing it. I can't. It's emotionally taxing.
Old history with GoPro.
I can't do it. I made more trades on GoPro in 2015 and 2016 just to try to offset loss, which I did, but just to try to do that. I am done with this company 100%. I do not want this. I am banning GoPro from the halftime report. But if it does trigger above 640, that's tradable.
That's exactly right. I mean, you got to play what you see and not get emotional, my friend. I get it. You get old stocks. There's still stocks that I won't touch, from the blast from the past type stuff, that if you don't feel good about that, you're not going to do it. I will tell you, one of the pot stocks is finally pulling back here. Cody and I were talking in pre-production. Cron is on the dirty, sexy money tackle 25 list. And by the way, and type this in the chat for me, guys. And I appreciate all the help you guys do when I'm teaching so that you can type in key items. Tackle 25 mastermind group is tonight. Somebody put that in the chat for me. Coach Mark is going to be hosting that and talking about any updates. If there are any, there's only really one stock that we're debating.
Yeah, there's really only one or two, Tim. And I doubt, I need a few more hours to kind of go through the research on it and really kind of get the numbers and whatnot to make some decisions on that. But I do not anticipate removing a stock that I've already made my decision on EA versus Activision. I'm not making a change on one earnings report when I think I do believe that Activision has a better route fundamentally than EA does. Trading wise, yeah, I prefer EA right now over Activision, but I still think Activision is a better company longer term, number one, and it's still a better cash flow instrument, number two.
Yeah. One stock also that's grabbing my eye, Cron here, I brought it up because Cody and I were talking about triggering here. And Cody had a take on where the trigger was, and he didn't pop in yesterday when we were debating it. But Cody, come on in here for a minute. Do you trade this stock quite often? Is that right?
Yes. Yeah. Just as a covered call, dirty, sexy money.
Dirty, sexy money. So where do you see the trigger here, young man?
I see it at 24. And so 25 up there with where that high wick was, to me, that doesn't hold much grounds, but I see 24 as the stronger trigger endpoint. And we actually saw it yesterday. It ran right up to 24, stopped this morning. It popped above it and immediately got thrown back down. So 24 is definitely the level that I see that it has to close above on some good volume before I see it considered a trigger to the upside. We got earnings coming up on it in about a month or so. So it's got some time. If it breaks $24, it's definitely a tradable signal.
Matt, you agree with that trigger?
No.
You're his mentor. Teach him.
I was actually going to say his mentor disagrees with him.
And yesterday, I think you said it was subjective, though. It's a change.
Yeah, trigger's subjective, though.
Yep.
It really depends on how aggressive you want to be versus how conservative you want to be. 24, if you're looking at it today, 24 is a triggerable number. If you're looking at it today, that's kind of where you had the high of yesterday before you kind of consolidated. It tested above that right now, came back down. What I said yesterday, I think still holds true. That the trigger looking at it yesterday was a very aggressive trigger, would have been above 23. But if I recall, that 25 level here, I do put great emphasis on. Number one, I do put emphasis on it because it's a significant whole number. Number two, that was not just a random tick up there on an earnings report and then it just came pulled back down. You had a tremendous amount of activity over a 2-day time period between 24 and 25. So for me, the better trigger is to be patient, be conservative, and wait for Cron to close above 25. You got to remember, this is a very, very aggressive company that will absolutely fly up and down. And so if you're triggering above 24, get ready for some whipsaw action. Now, it might work out, and you might get in at a better number and have a better return, right? But to me, give me that close above that 25 and let this sucker run. Think about it when it closed above 14 here, right? When you're looking at this kind of coming into that 14 level, you had a lot of evidence at 14, and I'll be the first to admit you don't have the same degree of evidence at 25 that you did at 14. But when it closed above 14 here, you're talking about another 10-point movement in the course of a 3-week time frame. I think with Cron, with something aggressive like Cron, it pays to be a little patient, because if it does break out and run, there's really nothing above that. Give up a little bit of your return for increased probability is what I would suggest.
A lot of the retail stocks are also continuing to flash.
Real quick, Tim. So Matt, yesterday you were saying just about 23 is an aggressive trigger. 24 is nothing. 25 is conservative.
Yeah, I would say 24 now would be an aggressive trigger. We have updated information coming into today that we didn't yesterday. So
Mhm.
the aggressive trigger above 23 yesterday is perfectly fine. An aggressive trigger above 24, I don't really have a problem with it as long as you know that you're in for some whipsaw, right? That you're in for some
Quite
whipsaw.
possibly, yep.
Yeah, I just think the better trigger is above 25 is what I personally believe.
Yeah, yeah, and really, I mean, building your directional rules on trigger, target, stop, and all of those types of things is very important for any trader. It doesn't matter if you're delta or theta, because you're talking covered call here, Cody. And tomorrow's feature for our halftime report on Theta Thursday is going to be when to time the covered call trade. You know, that was a request you
Well,
made, Matt.
we're talking two different techniques here. We're talking
Yeah,
directionally versus theta. If I'm theta trading right now, if
yeah.
I'm doing cover calls on cron, I'd issue it today, yesterday, the day before, the day before that, the day before that. It's in a pattern here. You don't have to wait for 10% of the ATR above 25 to issue a covered call. That's just we're combining in two different types of systems here. When you're doing theta systems, take for example the Russell 2000, right? Take for example cash flow condors, which is a premium system we put on for tackle trading, right?
Mhm.
Well, if I get my pullback down to 1525, where I have this historical support level here at 1525, and you ultimately have a very significant whole number at 1500, Tim, I'm not going to wait for, okay, give me slowing momentum, give me a doji, give me an upward movement in price, give me confirmation, give me a 10% increase in price above the previous day's close, and then I will issue a bull put spread. No, I'm playing zone defense when it comes to. Let me give the analogy, see if this sticks. Delta trading is like playing man to man. Okay, theta trading is like playing zone defense. I just need to play my zone. I have a zone of support between 1500 and 1525. If the Russell gets into that and shows me any degree of slowing momentum, obviously I wouldn't issue on a candle like this. But if the Russell gives me any degree of slowing momentum, I'll issue that bull put spread at that
Mhm.
point. I don't need to have my technical criterias of swing trading to issue a bull put spread. Same thing with covered calls. So when you're looking at cron, and I'm saying, okay, if we're talking covered calls, sell a covered call today. Do it literally right now.
Mhm.
There's no reason not to. If that's your purpose, is to cash flow on cron. If you're looking at it from a swing trading perspective, we have to have that debate on triggers. And guys, that discussion that Cody and I just had, that's a discussion we have every single week in the scatter report meeting. Literally,
Mhm.
we debate these levels every single
Absolutely.
week in the scatter report meeting, because no one person has the end all be all of this is the only way to do this. There are many ways to swing trade. There are many ways to position trade. There are many ways to cash flow. And so where one trader might say, hey, I like it above 24, and another trader might say, I like it above 25, it's not one versus the other is right versus wrong. It's really what works for you as a trader. If you're an aggressive trader on cron, a close above 24, if you're not worried about the 25 number, yeah, there's nothing wrong with that. You go into that knowing full well that you're going to have a less probability, but you have a higher potential return. That's the trade-off you're giving. If you wait above the trigger on 25, you're saying, okay, I'm going to give up some of my hypothetical return, but I'm going to have a better probability. It's just an internal debate traders have.
I
I will
love it.
say that that metaphor did work. I really like it. Zone defense versus man to man. I like it.
So better than my gun analogy?
They were both
Way better,
fine.
way better than gut analogy. I
That
mean,
gun
when
analogy.
it comes when tackle trading is giving a football metaphor that does fit, it works.
It fits a little better than my gun analogy, a little
Yeah,
bit.
yeah.
Okay.
I mean, we're
Okay.
not trigger trading
Okay.
or something.
Listen,
Bring
I'm
up the
I'm
rod
gonna I'm
again for
gonna
a second, Matt.
continue to give my gun analogy because I like it on targeting.
Give me the RTY for just one moment. I want to
Yeah.
make a comment on this one as well. You know, I was out in Seattle over the weekend and I had a good chance to meet some of our halftime crew and, you know, Cheryl and Ilka and Pearl and anybody else I met. And I hope I don't miss somebody's name. I'm not going to try to remember everybody. But if I met you out there, Eric, all of you, wonderful to meet you in person. I love doing that. That's one of the things I love about those events. But I was talking to one of our students, Matt, who trades condors. And she said, Tim, I'm like Coach Emily. I put them on and don't ever touch them, you know. And other traders, they like to fiddle with them and hedge them and manage them. And that's the way
And
I
I
am.
know who you're talking about, Tim,
Yeah.
and that individual you're talking about. is widely successful.
Yeah.
Widely. And I'm not going to give numbers here, but amazingly successful. Like she puts the sexy in dirty, sexy money. Right.
Yeah, I agree. I agree.
It does amazing things. And I do think we can, with those deep out of the money cash flow systems like cash flow condors, I fully heartedly agree that people micromanage that way too often.
Yeah. You got to find your style and you have to find your lane, and that comes through practice and application and all that kind of stuff, but your system should fit your life. And we're going to bring Cody in here and talk to him here in just a minute after we go through the routine. And Cody was talking about how he's become more of a cash flow trader. You know, as you get married, you get a job, you're working.
Wait till you have kids, Cody.
Right? I mean, theta is there for a reason. I think delta and theta can be combined together, you know, kind of symbiotically to form a really powerful system. If you can do both, I think you're better off. But I do understand why people just say, hey, I'm going to focus on theta, you know, because cash flow is very powerful. Give me the dollar, if you would. Let's keep working through the markets, skip through all of our indexes and whatnot. The dollar's flat at resistance. Not a lot going on here today, but I will say this, that dollar CAD pair, which I talked about, is running. You can find relationships in those cross pairs. I brought this one up the other day here, guys. And if you've never traded Forex is a powerful day traders, you know, kind of product, or even a swing traders type product. I love the leverage here, Matt. Beautiful breakout. When oil is getting beat, the CAD is going to drop. The Aussie's down, the New Zealand dollar's flat.
We got to go into detail on the CAD, bro. This is not a technical movement. This is a fundamental movement. Bank of Canada announces monetary policy of 1.75 rate. They kept it at the same type. And in a shocking development, a shocking development, the Bank of Canada admits that they do not understand economics 101.
Where's Coach Greg when we need him?
In fact, on Twitter, Coach Greg, you got to get on Twitter, because on Twitter, I literally was going to put our Canadian Coach Greg live shot of him throwing money out the window. You know, I mean, it was absolutely amazing. But no, they did admit, I say that in jest, kind of. They did admit they did not anticipate in January the slowdown that would happen in the global marketplaces. Hey, Bank of Canada. Okay, here's pro tip from Tackle Trading. Come to the halftime report every day, Bank of Canada, and we will update you on everything that's going on economically every single day, because we were talking about this all the way back last year. All right, Bank of Canada. So the Bank of Canada admits they don't know what they're doing, and the Canadian dollar is getting absolutely crushed, triggering above what we talked about the other day. And what I said, Tim, this just came out just a few hours ago. When you look at this price movement here, Tim, this is the Bank of Canada right here, 10 o'clock p.m. Eastern Standard Time. It came out. Everybody hated the Canadian dollar because of what the Bank of Canada said and did, as well they should. I need to get Coach Greg on. We need to get Coach Greg on to have him just rip on them, because he will do it better justice than I will. That trigger above 134 right here, absolutely triggerable. Look at that nice little retracement coming back down. Consolidation here. That secondary movement has already kind of played out here. Wait for it to reestablish itself. But this, to me, given what the Bank of Canada has said, this to me is very telling. I'm not triggering yet. I'm waiting on it to really kind of give me a better setup here. But I do believe that this now is a bullish uptrend in the U.S. dollar against the Canadian dollar, versus when you're looking at the actual index, the basket of the currencies. Not a lot happening when you actually look at that basket, but individual components in that basket are moving right now.
Mm-hmm. Yeah, you know, when the CAD sells like that, makes me instantly look at all the commodity-based currencies. The Aussie dollar pair is also setting up in an interesting way, in my opinion.
Well, I am on the Forex report this week.
Yeah.
Oh, that's a breakdown. That is a breakdown tied to oil.
Mm-hmm. And bringing up oil, I mean, move on to the CL contract. Obviously, the EIA numbers come out every Wednesday. No surprise, they got it wrong again. They get it wrong every week. 7 million barrel build instead of the 1.2 they expected. They had a huge draw last week.
About on that. That's about on par. That's par for the course, though, bro.
Yeah, just miss it by
I
six,
mean, they
7
miss it by
million
about 6 million every week.
every single week. It's fine. Yeah.
Yeah,
The margin of
congratulations,
error.
EIA.
I get it.
The reason
Crude,
you went from orange to yellow importance is because you suck at your job.
they've not proven good at it. That's for sure. But I will say this: crude oil down, but holding, Matt. Only down 1%, holding that moving average relative. And we've talked a lot about crude oil. We're going to talk about it every day because of the importance of this commodity. We know it needs to break one way or the other. With the Russell getting beat up the way it did, I thought crude oil would take it more to the downside. It did not do that. Are you impressed at all by that relative hold of the support?
No.
Nah. Yeah, I get it. I get it.
You're not touching crude until it breaks out. And I already talked about the breakout being I'm highly skeptical of the breakout now too. So cash flow, the only way I'm approaching crude right now is cash flow.
NG next. I want to talk about natural gas. We don't talk about it every day because it's become untradeable for a long time, Matt. But that's a bear retracement pivot with a red candle against old support. Technically, you got to respect that signal. I know that we've got support down here in the 250 range. Are you anywhere getting close to wanting to trade natural gas again after all of that fourth quarter craziness?
Close. I said this last week. I'll say it every week. I need to see a couple things. I need to see the range come in between $2.6 and $3 again. Mm-hmm. That's the 2.5, 2.6 in that range, $3. You're starting to see it. It's behaving very similar to what it did last March when it started consolidating and performing the same way it has. Natural gas is not a directional instrument, in my opinion. It's more of a cash flow, and you should only touch natural gas in the futures market if you have that pro type skill set.
Yeah. Metals market real quick: gold, silver, and always now palladium. I think I'm going to bring it up every day. Palladium's up 1.3% again, while the rest of the metals market is flat. It's a juggernaut. I mean, it literally is just a fundamental and technical juggernaut right now. PALL is a wonderful product, by the way, for the ETF player that can afford the equity to play it that way. PA relative strength, Matt, bullish flag. Gold's still flat, though, not really catching a bottom yet. Maybe it's not selling today.
Gold flat, holding its support levels right around 1280. Again, I don't think anybody has anything to do on gold until we see a couple things. Either one, 1280 gets broken to the downside and you should cover if that happens, or two, we get a break back above that 1300 range and we start seeing that weekly chart confirm. So, gold's hanging out today. It's kind of what you want to see if you're a bull on gold. Obviously, you want it to go up and up and up every day, but that's not market dynamics. So gold just kind of slowing its momentum coming out of the bloodbath that gold had last week. Let's look for it to kind of reestablish its trend, and then we'll make some decisions on it.
Yeah, I got a lot of stocks that I'm going to flash through real quick. I want to bring Cody in here for just a minute, though. Cody,
before you bring Cody and do all your things with Cody, I do have earnings announcements to get out real quick.
Sure. Yep.
Thor, THO, Thor Industries here announces earnings per shares of 65 cents versus the expectation of $1.05. Big miss, in my opinion. Don't know why anybody's buying it off of support. That is not something that I am looking at, but you now have a support level that is being established at $60. I am looking at how that performs at that $60, not from a buying perspective, but from a shorting perspective. Abercrombie and Fitch, Tim, your favorite company. I know you love buying all your clothes there at Abercrombie. Abercrombie announces earnings of $1.35 with against an expectation of $1.13. Guidance was in line. Market is loving the big beat. Abercrombie beats, no doubt about it. Guidance, again, was in line. Urban Outfitters here, Tim, reports earnings per shares of 83 cents versus an expectation of 78 cents. Slight beat on Urban Outfitters, but not showing you anything really. And guys, keep an eye on that 29.84 by 30 level of support. Once again, it tried, it tested, it couldn't, came right back down. Guidance was in line. Revenue was in line as well for Urban Outfitters, a company that you and I have some history with, Ambarella here, Tim. Ambarella reports earnings per share of 14 cents a share versus the expectation of 4 cents a share. So revenue decreased 27.6% year over year, and forward guidance was downgraded as well. If you were in it, that's a negative earnings report in my opinion. I'm not looking for this one in any capacity. I'm done.
There's a bunch of stocks that are flashing on my radar. We'll get to them here in just a few minutes. Cody, I want you to come on in here for a second, if you would, young man. And Matt, drop the screen for a few minutes. Cody, I've been doing this thing where I've got, Matt knows about it. It's a project I have right now where I interview traders. Okay. And where I ask him the same 5 questions over and over again. I'm going to put you on the spot live here. You ready, young man?
Let's do it.
This is 5 and 5, which means 5 questions, less than 5 minutes. You got to give me a quick answer.
Better than
Number 1. Yeah, I agree. Why did you get into trading?
I got into trading because my adventure was I was trying to figure out, like, okay, how do I become successful? And I was looking at it, and I was looking at different jobs, and I just kept thinking, like, this just seems too hard. Like, why does it seem like you have to work for 40 years, just to get by and hopefully, send your kids to college and everything? And I managed to find a couple different books, one of which being Rich Dad Poor Dad. From there, I found myself sitting in a 3-day event in front of Matt Justice. And I'd kind of been looking at it a little bit before then, but that's when I really just, as Matt says, I dove head first, both feet forward.
Got it. I like it. I mean, sometimes you got to take that leap of faith. There's no question about that. And many times in life, the more skin in the game you have, the bigger commitment you make, the more you make sure you follow through on it. There's no question in my mind of that. Number 2, what is your trading edge?
I would probably say my trading edge is actually working with you guys. The fact that I can surround myself with, traders that have decades of experience more than I do, and being able to push ideas and learn how, if I'm seeing something, then might be slightly different than what y'all are seeing, and being able to, work at these scouting reports and debate back and forth. Like, okay, well, I see a target here. Oh, well, I think the target's a little further. Mm-hmm. So I think that's probably my edge, just having great mentors.
What is your daily routine?
My daily routine starts typically with the news. Just I want to see what the top headlines are. Pretty much the same way that I do the newsletter every weekend is what I do daily. I start with the news. Okay, what's grabbing my eye? What was I expecting to already come out today? Before I even like turn the headlines on, I go, okay, there was supposed to be an oil report out today. There's some trade talks that might have some news out. And then from there, I'll just, do a basic top-down analysis, make sure nothing's going crazy. The only time I really get out of that routine is if I have alerts flashing that I need to go adjust my portfolio first.
Yeah.
So other than that, just top-down analysis is basically the way I go.
I get the halftime prep every day. I pretty much know what your daily routine is. I trained you how to do it, and Matt and I go through it with you every single day. So I think it's good, and part of that is showing up here, right? I mean, we're doing this together, each and every day. That's great. I love the answer. What are your goals? What are your trading goals?
Trading goals, main one is cash flow, just so I could move into a point of I would love to be able to.
But here's the thing, though, Cody. A goal without specificity is just a dream. Okay.
I actually have my, y'all can't see it because it's behind my computer, but I have my theta target written down on what I want it to be, and it is a specific goal written down. I look at it every day because I want to be able to cash flow.
I love that concept. I mean, for an analytical that can pin down the numbers, I think theta targeting is a fantastic thing to do and allows you to really quantify a goal. I like that. So you have a theta target goal. Is that right?
Yep. Yes, I do.
That's awesome. Cash flow, my friend. Last one. You're doing great, by the way. Everybody say great job, Cody. And I'm going to give you a softball here. What advice would you give a brand new trader right off the turnip truck?
Right off the turnip truck is don't try to go too fast. Don't try to learn everything at once. Don't try to say, okay, well, I get it. I see the swing trade now. How can I, spread it out and do this and fancy stuff? And stop, slow down, take your time. And I know this because literally it's what I didn't do. I tried to go, 100% right away, rather than if I would have just focused on a simple covered call for 6 months, and then said, okay, maybe I should just try to do a swing trade for 6 months rather than just starting there. I tried to jump right in doing, volatility strategies or just crazy things that I shouldn't have done right out of the gates. So I would say for a new trader, slow down. You'll learn. The market's going to be open tomorrow. It's going to be open the next day. It's going to be open in a year. You're not missing out. There will always be another opportunity, because that fear of like, the market's moving right now, I need to figure it does get you. Just slow down.
Yeah. One thing, and Matt, I'm going to bring you back in here, and that's it. That's it. That's 5 and 5, right? That's my new thing. And I've got about 10 of those I've done. I'm going to start putting together as blogs. Kind of put Cody on the spot here today, Matt, but I will tell you, I'm very happy that Cody is an addition to the tackle trading family in the last year. When we mentor people one-on-one, and what's amazing, and out there, if you're halftime crew, if you're team tackle, I got a chance to meet Ilka over the weekend, for example, who I'd never met in person, and you just build a different relationship. And I want you guys to know we've got your back here. We do this every day for a reason. Watching Cody grow and develop, it's a testament to him, Matt, but it's also a testament to you as his mentor, because a lot of the answers he just gave, I heard the teaching that you would have given him over the years. There's no question.
Well, I think Cody's journey is very similar to a lot of ours, right? When we first we get excited, we start learning about the markets. We start learning about, how to make money in the markets and getting our money, making money on top of money and whatnot. We start learning about the velocity of money and compounding gains, and we get excited, right? We get excited. We want to go out there and pop call options and go out there and do amazing things. And it just reminds me of something, Tim, you've said many times to me and many times over, when you state that people underestimate what they can do in the long term and they overestimate what they can do in the short term. And that's really what Cody's talking about. It's about learning anything, guys. You have to dedicate a portion of your life to it. If you want to be the best lawyer in the world, you got to dedicate your life to it. If you want to be the best educator in the world, you need to dedicate your life to it. If you want to be the best trader in the world, you need to dedicate your life to it. If you want to be a great trader, you need to dedicate some of your life to it. It's not a matter of, let me go out there and take one class and go out there and have a life-changing moment for the rest of my life, and all of a sudden you're Warren Buffett. No, that's not how it works. It's just not, and that's not what tackle trading represents, and that's not who tackle trading will ever be. Tackle trading is a community of like-minded investors that is there to help each other out and to answer each other's questions and to brainstorm ideas and to really kind of build that long term. And so Cody's in that stage of his investing life where he's kind of came out of that, oh my God, I'm gonna get excited and I'm gonna go get rich in the first 6 months, right? Mm-hmm. He's coming out of that and he's starting to think about, okay, at this age of my life, I'm now married. I'm now, I'm now a professional. I'm going to treat this, from a 10-year horizon instead of a 1-day horizon. And all of a sudden, you start thinking about compounding covered calls and you start thinking about cash flow systems. And as Cody's life has changed dramatically over the last year, Cody, I mean, a move from Texas to Hawaii, getting married, responsibilities, all that jazz. He has made the necessary adjustments in his trading routine to still be able to do what he does best. And so instead of like when we're looking at bullish retracements, for example, and we're talking about perhaps doing a swing trade on it, Cody's like, okay, I could do that swing trade, but I'm also going to have to be in in front of the market a little bit more. I'm going to have to manage a little bit more. So instead of doing that swing trade that Matt's looking at, why don't I use the exact same technical setup and write a bull put spread, for example, right? Yep. Where you don't have to look at it. You don't have a lot of aggressive management techniques. And so he's making those adjustments to his trading as his life adjusts. And that's what it takes. Every one of our lives are going to adjust over the course of the next year.
Wait. You're saying we're not a finished product? We're not just done?
No.
We're not done? All right.
No, I am a work in progress. There is no doubt about that. But I do know that as life evolves, that I need to evolve with it the same way that as the markets evolve, I need to evolve to what works in those market conditions. And as a mentor to Cody, but I don't consider myself a mentor to Cody. I consider Cody one of my friends. That's what I consider Cody.
Definitely.
You know, it's just there's a bond between Cody and myself. There's a friendship that's going to last for our entire lives, right? And so it's more. I'm proud of Cody for who he is becoming, not as a student of mine, but just as a friend of mine. And I'm very, very proud of his growth, and I'm excited for his future.
Yeah. Keep kicking ass, young man, and don't ever apologize for it. You're doing a great job. Your growth is great. You're doing great. Guys, there were a bunch of stocks I wanted to look at, but we're done here. Our time is up. Go check the scouting reports. There's a bunch of stuff flashing, Matt. Pan W setting up again. Dropbox is shortable right now because they're breaking below those triggers that you identified. There's a bunch of candidates out there. But the big thing is Tackle 25 tonight. If you're a pro member at Tackle Trading, make sure you get there. And if you've not finished the course yet, take the afternoon and go and finish the course and attend the mastermind group tonight. Great job, Matt. Great job, Cody. We will see you guys tomorrow for Theta Thursday. Peace.